Good afternoon, everyone. It's the one, the Oli, the Senor Silverback, back on another Rogue Money Radio Friday, where we have combined, we have assembled the Avengers of geoeconomics, geostrategic, and geopolitical analysis, and I think it's the best team out there. With that being said, we also have CJ in the background. He is working on the flux capacitors, but he's doing it mobily. He is on and about in his mobile Rogue Money wagon, in parts unknown, and making sure that the airwaves are coming out nice and smooth. With that being said, also guys, follow us on Twitter at the Rogue Money. Check out the new revamped RogueMoney.net website. If you haven't checked it out, if you haven't seen it, you need to check it out. And again, keeping with the thematics, we've added some new features to it. Check it out. We have a whole social feed. You could, watch the broadcast directly on the website. Now, you don't even have to go to YouTube anymore. You could watch the broadcast directly from roguemoney.net. And we also just posted our latest interview that we had with the godfather of hipsterdom himself, Gavin McGinnis. That was an awesome interview, unbridled, and it was a hell of a lot of fun. So if you got a chance to listen to that, go ahead and listen to it. Gavin is great as a social commentator, breaking down the things that he sees socially, and he's on the forefront of pushing our libertarian agenda. With that being said, I want to welcome to the team. More of the team members are going to be showing up. I think W is on. He has emerged from the Soviet submarine somewhere off the coast of the Pacific. It's a decommissioned Kula class submarine. He's parked it somewhere in some river or some lake in Washington State. Bankster Slayer is here, Deborah Carruthers, the one and only researcher extraordinaire, and the man himself, Ken the Shotgun, a.k.a. the Professor, the pool, the billiards player extraordinaire himself. Ken Shorjan is with us as well. With that being said, welcome aboard, team.
Hello, everybody.
Aloha, snack bar. Where do we begin,
Aloha,
guys?
aloha.
Aloha. I wonder where you are. Where'd you park your sub this time, W? You said aloha, so...
I'm just down the street from O and the clan right now, actually.
Oh, say hi to Barry when you get a chance.
Yeah. No, golfing was good this morning, and now we're on to other endeavors for the rest of the day to cause problems wherever we can't find them.
That's fantastic. All right, guys, where do we begin? And the Wolf Man, the wild man from the Carolina woods has emerged. Wolf, how are you, sir?
Pretty good, thank you.
Fantastic, buddy. Fantastic. Where do we begin, guys? I mean, let's.
I think you guys need to go right into the situation in China because I don't think we have a lot of time to.
Go for it.
The situation with the Chinese response to what has just happened with the increase in the Fed funds rate and their reaction to it, I think, is across the board. They're sending messages in every category they can, diplomatically, in anticipation of Tillerson's arrival in a couple of days, just to let everyone know that they are not at all amused with the direction that things are going. I think some of our other team members can go into the details a little bit better, but Jim Willey pointed some things out with what's happening in the gold markets, which I confirmed separately with one of my contacts who deals directly with one of the families that's a primary family in mining gold in China, and just an incredibly wealthy family, and their understanding of the way this is going forward is meshes with what Jim Willey's contacts have been seeing in China. They are going to make a gold play. Even this announcement last week on the closing of the silver window, and of course, you and Ivy talked about some of this, and just missed letting each other know that I had seen a code that had was the same as the code before they closed the silver markets, or announced the stopping of the silver rigging window, if you will, a couple of years back, and the same code came through completely out of the blue, only 2 days before it was announced. I was just actually very, very surprised. And on the backside, and I won't time being, but we are tracking, and I provided that corporation name to the rest of the team members, where a lot of the coordination is taking place on the numbers, literally, for these market manipulations that are happening in the broad sense. You know, if you look at what's happened with the Dow over the last couple of months, the big cap stocks are going absolutely crazy. And of course, that's highly manipulated. The small cap stocks are dying on the vine right now. And so that goes back to manipulation when you see this divergence, similar to what you see when you see a divergence, say, in physical silver versus paper silver. When you see these large cap stocks that are widely divergent, but it's a very narrow segment of the overall market, and they're going crazy. Stuff.
Oh, what is that? Hey, CJ, you got to mute, bro.
Going on.
CJ. Oh, there you go.
There.
CJ's he's on his Rogue Money Mobile, and he's going to parts unknown. But go ahead, W. You were saying.
Well, and so this divergence is important for people to understand that the highly reported number that everybody looks to for a sense of good, future portents, etc., may not necessarily be the rest of the story, and so they have to be a little bit concerned. This situation with China is what we've been talking about for a very long time, as goes to what's going to happen to the dollar. The last thing I'll say, and I'll hand it off to the rest of you folks, is remember, with what's going on with the dollar, even this administration, the Trump administration, wants a weaker dollar, ideally, because that's good for trade. China is really stressed by this. So even the military actions in the South China Sea over towards the Philippines with the Spratly Islands, this militarization and build out of these islands, even naming the actual complex there a city, tells you where they're going. And so that little area, this isn't some podunk rim of the Pacific that is meaningless to the rest of the world. That exact area where these islands are being built, militarized, and built out as cities is accountable for $5 trillion of trade going right through that little path every year. Pay attention.
Wow. Ken, you got anything to add to that?
No. Well, yeah, obviously. One of the interesting things is in that published article that Jim Willie put out today, and this is in tandem. It's not part of his hat trick letter, but it was in tandem to it, or an addendum. Is he also got some confirmation from London Paul and Euroraj? So this is something you want to talk about with London Paul on Monday. On Monday, right? One of the significant things is the breaking of the paper gold market. What ended up happening was the play is when the rate announcement took place, instantly gold shot up. Now, for anybody who's been paying attention to what happens with a rate hike, nearly everything except, across the board, did exactly the opposite of what it should have done with a rate hike, even if they had 100% knowledge of it. Okay, the dollar went down 100 basis points. Gold shot up 20 to 23 bucks. The stock market went higher, 120 at the end of the trading day. The bond yields fell. Yeah. Okay. So everything across the board was exact opposite, which tells you that the markets had bought the rumor and sold on the news. Because they already knew the news, and all they were doing was front running it and then moving on to different pastures, because they figured that the interest rates rising is meaningless. Why? Because inflation is already out of control of the Fed. Right. Inflation, they are behind the curve. And I did an article last week. I went back and took a look at what happened, because we are in stagflation. Yes, we are. Matter of fact, if you look at shadow stats, we have never gotten out of a recession when it comes to GDP growth since 2000. Right. The only reason that it's even gotten close to 2% is because they've misinformed about the true inflation. They misinformed about adding double seasonal adjustments to GDP to make sure that it stays positive.
Right.
So we're in stagflation, stagnant growth with rising inflation.
Right.
Well, the problem is in 1978, when Volcker was the head of the New York Fed, he went to the board of governors and said, "Look, we need to boost the interest rates from 7 to 9%. That's how much it was in 78.
Yep.
What they found out is going into early 1979, inflation was still raging and climbing at 13%.
Mm-hmm.
So then they boosted it again to 11.5% interest rates, and it did nothing. And the only thing they could do was when Volcker finally got the head of the reins. By 1981, they were up to 20%. We know today because of the fact that back in the Reagan years when Volcker did this, there was no debt. There was less than $1 trillion of debt at the time.
Yeah.
So we have too much debt. We have too much money. The fact of the matter is, for every 1% that the Fed raises the discount window rate, it costs the taxpayer $250 billion per year to pay the interest on the debt. So can you imagine going up to 5%, adding another 4%? That'd be $1 trillion out of our federal budget that they have to pay on interest alone. So with that being said, the problem with China is guess what? China is still partially pegged to the dollar.
Yep.
And every time the Fed and see, this is the one thing that you will never hear across the mainstream. Okay. The Fed and CMBS and all those, they like to tell you that the Fed is dealing with the U.S. currency. No. Anything that has to do with the U.S. currency has to deal with the global reserve currency.
Yes.
So as the keeper of the global reserve currency, they should have never monkeyed with interest rates once. They should have never done quantitative money expansion once. They should have never done this because it affects everybody else. For those who never really put the keys together, the reason the Arab Spring took place is because following the financial crisis and the Great Recession, the dollar had gone down to 72 on the index. And in the course of about 9 to 12 months, it shot up to 84% or 84 in the index. That may not seem like a lot compared to the 100 to 105 we've had over the last 6 months to a year. But that big jump, obviously, what was going on at the time? Oil was $145 a barrel. Commodities, corn, and that were at all-time historic levels. So when the dollar got stronger, and everybody was in Great Recession, Egypt, Yemen, and them, they couldn't afford to buy commodities. They couldn't afford to buy dollars to buy commodities for these overpriced goods. And that's why the Arab Spring, it was really the bread riot. It had nothing to do with overthrowing tyrannical governments. Well, that's what we're finding here because the strong dollar, when the dollar did that just for the Arab Spring, that's really when the rest of the world decided to go into a currency war and right. Race to the bottom. Because they couldn't afford to have the United States dictate their own monetary outcomes. Mm-hmm. So they just said, screw it. The United States, have to buy our goods, and if they have a strong dollar, then we can, export more and at least keep our economy sustained if we devalue our currency to the rock bottom. China, of course, survived through the Great Recession and the financial crisis. They came out pretty good. The emerging markets, yada yada yada. But now what's finding is that China's coming into their own slowdown, and because of this, with the U.S. wanting to do its own devaluation policy, that's going to make the yuan stronger. And since they're already going into not a recession, but faster declining growth, it makes it even worse. So China, as somebody was saying the other day, I think it was an interview where you were having. Oh, no, it was Dave Kranzler. He said, China doesn't want to change anything. They're benefiting from all this. Yes and no. Fact of the matter is yes and no.
Right.
but now I believe what we're coming out with this this meeting at the Shanghai Gold Exchange and this move to do this currency reset, China has reached the point that they're going to depeg from the dollar, and to do so, to be able to stand their currency on its own while not getting so strong that they're not going to be able to export their goods. What do they have to do? They're going to have to back it by gold.
Absolutely. Deborah, Bankster Slayer, you've had some intel in regards to this. What say you?
Right. This all got started yesterday. I am the person who mentioned to Jim Willie that the person who had to pay for his own tour of the Shanghai Gold Exchange. That was the greatest slap in the when someone invites you. When someone invites you, the opposition, to come see their financial arsenal and then makes you pay for it.
Oh my God.
The game is over. And these are, I was going to bring out a couple of the points in Jim Willie's blog from Euroraj. And after I mention this, the question that's been sticking in my mind is how China feels after the March rate hike.
Yeah.
What are they going to do with the June rate hike? Or will they do something to prevent it? Or is this where we're really going to start seeing some serious bond dumping, or actually treasury bill dumping, and or a massive deval of the yuan? That's, no one has mentioned that yet.
Mm-hmm.
But anyway, in the article, this is what Euroraj, this is one of Jim Willie's best sources. It's in his, Euroraj is one of the guys in his group, like London Paul is.
Right.
He said, he noted also that the Shanghai Gold Exchange did spike the gold price as soon as the Fed was meeting. And he said unequivocally that the Chinese do not consider the U.S. Fed, the banker cabal, and the U.S. elite as honest business partners any longer.
Wow.
He expects their harsh, clear revenge to follow, with the launch of the long-awaited global currency reset to come next. And then in the next paragraph, he says, Jim Willie says, it will soon become every nation for itself in a global free-for-all battle. It is hard to imagine the US dollar enduring what comes in an unscathed manner. Yeah, so this is, that was a significant statement when Euroraj said China realized, they see now who their enemy is, that the Federal Reserve, and this is not a game between governments. China realizes that is, even though everyone in this country thinks it's an agency of the U.S. government, it's a banker network, a banker priesthood, like I always call it, part of a bigger picture, of course. But this is, now China sees that it cannot Fed, there's no point to cooperating with them anymore. And like Ken just said, the dollar depeg is coming.
Wow. Incredible. Wolf.
Last week, it's ironic, I'm having a conversation with somebody I think is pretty important. In this case, London Paul. And I decided to ask him, what's up with China? It's not in the news. Nobody's saying anything.
Right.
All of a sudden, they're in the news and they're pissed. For information out there, we're the importer, they're the exporter.
Correct.
And they're pissed. We've had stagflation for some time. It just isn't being reported. Macy's, Neiman Marcus, parking lots filling up that were formerly vacant with cars because there's overcapacity and no demand. And the stagflation yields overcapacity. It's evident. The difference is we've been dealing with stagflation and it's been a BB gun getting shot at us. We're getting ready to stare down the face of a double-barrel shotgun and it's going to get unloaded. That's what's coming at us. And the biggest thing is for the staid and reserved Chinese to come out like this just doesn't bode well. you might as well have your stuff in order, because there's going to be some real problems for the people on the ground who are dealing with overcapacity in autos, overcapacity in education.
Yeah.
They're building housing as if everybody's going to keep going, even though there's student loan problems beyond belief. And that is the part that greases the wheels of education.
Correct.
I had a meeting with a guy that's in the debt business for the education stuff for a 2-hour lunch on Wednesday. Well, that was informative. These guys are operating on thin margins, and I got educated real quick. There's no such thing as education isn't a for-profit industry. It is. He said, he made it clear. He says, well, get real with that. Churches are for profit because if they don't have something to the plus side of the ledger to pay the light bill and the preacher, they don't open the doors.
Right.
And he said the bottom line is we're all nationwide on average operating on a 96% occupancy necessity. That's like a hotel needing year-round 96 of its 100 rooms filled before they can equal the debt.
Wow.
They got a problem. And he said it's getting ready to blow up because the real feeder to it ain't sports, ain't big donors. He said you got to wake up and recognize they all came through one time as students. He said it's the students that grease the wheels. And he said right now they can't afford it. The parents can't afford it. They're co-signed on this. They're not going to be able to pay for it. He said what's going to happen is there's going to have to be a bailout. He said this is going to blow up big time. And the numbers he gave me were staggering.
Wow.
So we're in stagflation in the areas that were the biggest part of our budget. We were in heavy inflation in those areas while there was industry demand that was claimed to be nil, and it is nil, but the problem is we had no inflation supposedly, but our biggest budgets are medical, educational, insurance related. And when you combine all that with your property taxes, you've taken up half the budget, and those are at near double digits year after year after year. Ironically, I decided to do a search on when student loans became popular. If you look at Wikipedia, it literally says in 2006, and it says they are now a part of the GDP at 7.5%. It's actually in Wikipedia. They applied as a portion of the GDP. Unbelievable.
Wow.
So when it comes down to it, our laughable debt situation is coming home to spank us, and the guys that can spank us the hardest are ticked off. This is going to get very interesting, and it may blow over. But then again, it could blow over just like Wednesday everything was going to explode, and Wednesday passed and nothing happened.
Absolutely. W.
Real quick, I want to add something.
Go ahead, Ken.
Wolf had said a little piece of news, little article over on China Daily from the 15th, 2 days ago. Laid off workers a priority as China cuts overcapacity.
Whoa.
The premier said this. Li King-Kwang. So that right there, when they come public with this, China usually doesn't let the world know what their status is when it comes to the economy.
Right.
So when this comes mainstream in Chinese publications, then they know there's a problem, and that's why I'm saying China is starting to go through an enormous slowdown. And if China slows down, everybody else is screwed already. So anyway, carry on.
Well, let me throw in here too, and this is why I think that it's so timely to talk about this China situation. Look at the news just in the last couple of days since the Fed rate increase announcement. Already we're talking about the potential that we may go ahead and bomb North Korea. To make a little example, or to send a message, if you should say, well, who indirectly are we sending a message to? We're sending a message to China. For all that they act like North Korea is, an entity unto itself, and it's isolated, and China, has to be there. China's using it as a proxy, and they rattle that chain anytime they're pissed off. Rattled back and said, yeah, we might just bomb the hell out of that place. Just, we'll do something like the Israelis did with Saddam when they went in and hit the nuclear reactor. Do do something extremely precise, but to make a point. And unlike areas of Syria where they got S-400, S-300, S-500 coming, missiles that take out an F-35 or a B-1, B-2, North Korea doesn't have that. So we want to go in there and send a message. We can send a message and up the ante, if you will, in this Game of Thrones. The other thing is that this tit for tat back and forth. I mean, the Chinese with their aircraft carriers now, working through the logistics of projecting power out into the region. They are becoming very territorial because they understand what's afoot. But the last thing that I'll add in all of this is, who is China really facing off with? They're not anti-Trump. Tillerson's going there in a few days. Trump's actually got the same opposition as China does. It's
Correct.
These families having a war. It's the different banking families. And this is something that, we've been having as a theme for quite some time. These different banking families are starting to, draw lines and begin this real face-off for who's going to control the next phase of the whole world's monetary system, because it is coming down to an end game. One or the other is going to be on top, and amongst themselves they use this sexual innuendo, who's on top. And so that's their attitude. This is about this isn't a battle to destruction. That's where people get so screwed up. They don't get it. They think this is a battle to the death, and it is not. These players are playing in a battle to domination, but both sides expect to survive this. They just are fighting over who gets to be in control at the end of this game that's been playing out for, well into, the second century now, in this current phase of the game.
Absolutely. Tremendous information. There's a lot of things that are happening. In terms of, when you just look at the Shanghai Gold Exchange, the absolute tractor beam pull that it had on the COMEX, that it had on the London price fix, is absolutely incredible. I mean, we've seen months ago the arbitrage. Now we're seeing the beatdown in gold that's occurring, and now with the intel coming out, where people are, Western banking individuals had to pay to go see the financial instruments that are going to pretty much wipe them out. It's truly remarkable to see all of this. It to say the least, the game has forever changed. Bankster, what say you?
Had to unmute again. Right. And I was going to tie this in with we were talking, of course, about gold and the bonds and stuff. I wanted to mention that little comment that the foreign minister of Turkey made. He, as a result of the Dutch election, and for those who haven't been following, Geert Wilders lost that election. Although you have to remember that they're a parliamentary system. It's really all about gaining seats in the parliament. And the pro-right, well, they're not really right, but Wilders was the candidate who really wants to get out of the euro, or at least to stop the immigration that's been happening. And he actually picked up 6 seats, while the prime minister who kept his office lost 6 seats. So things are tightening, you can see sides being drawn now in the Netherlands. And the foreign minister of Turkey says he sees both the winning prime minister and Geert Wilders as just two sides of the same coin. And what he said, he accused the Dutch of bringing about this clash of religions, clash of civilizations, really. That's the phrase we hear from other writers. And he warned that a war is coming. Not that it might come, but that it will come. He says, you're already setting yourselves up for a major battle all across Europe.
Oh, somebody dropped their headphones. Hey, one of the things on the side note, while we wait for V's moderation, I'm going to write an article a little bit later today. There might be a secondary thing that besides China starting the currency reset and moving towards depegging from the dollar. One of the things that may come from, and it might be tied to the web bots, it may not, but one of the things that may come from this move towards bilateral trade and away from globalism, the agreements that are being worked out over the Kuril Islands between Japan and Russia.
Yeah.
One of the things that they want to do is, of course, is they're in agreement of, rather than simply setting it as a place for Japan to recolonize per se, but they want to create it as a Pacific economic zone.
Mm-hmm.
And one of the things that they're talking about now is creating a completely new digital currency for use in commerce on that island.
Wow, that's incredible.
So you could have in the future bilateral trade not being done between yuan and say Iranian reals or things like that, but a new special digital currency that maybe is backed by gold or backed by something, or tied to productivity, resources, etc. Using the blockchain as that functionality rather than normal settlement, which has been the cause of this huge trade deficit, fiasco all across the world that has really caused part of the problems.
Absolutely.
Ken, you just used the word productivity, and it brought to mind something I researched 2 days ago. And we're on a Dow run now without a bear market 20% beat down since the spring of 2009 to present. There's only been one period in modern equity history that's topped that. It was 1990 to 2000 when we hit the dot-com bubble.
Right.
What I'm wondering, because it started bothering me when I looked at productivity during those years, in the 90s, it was pretty high. We were still producing stuff and actually improving on our procedures in our industries.
Well, yeah, but you forget, after Glass-Steagall began the financialization
exactly. That's what I was going to get
Wall
to.
Street. And one of the things, this is one of the things the Fed, I truly believe the Fed had to do. The Fed, when they were going to expand this money supply with trillions and tens of trillions in QE, they had to destroy the velocity of money. Because if you expand your monetary base by as much as the Fed needed to backstop the derivatives and all the financialization that the banks had gotten themselves into, if you allowed that money to go into the general economy, what naturally is the outcome? Hyperinflation.
That's what I was.
That's why they've had to keep this at above, and and they can't keep that completely. This is why inflation has been rising, especially since 2001, if not 2008. Is inflation has been rising in prices because you can't keep it completely at the Wall Street level. That money trickles down in different ways, and that's of course what's led to the rising prices.
That's the reason I think the beatdown in the equities that could come, there's no guarantee because we've got such a phony market.
Correct.
But when I looked at we've had a run up that in my opinion actually exceeds, when you look at the level of productivity, which is nowhere near what happened in the 90s, it's much lower. We've been running on air for a long time, just absolute smoke and mirrors. The blowout on this could be amazing. And ironically, when I had that meeting with the guy on Wednesday, I asked him, I said, when did you think the inflation on tuition and college expenses reached a point where in 2013 it's like buying a car? It was $30,000 for the average student loan.
Right.
He said he didn't know. He said it's been near double digits for a while, but not quite, but close. And I said, well, wouldn't it be ironic if it goes right back to my creation of what I call the triple-headed hydra, which came about by the repeal of Glass-Steagall, and you had the merger of banking, brokerage, and insurance, and the bubble blowers and paper came about.
Yeah.
Well, I want you to know, I actually got back to the office, did a Google search. The Google search reads, and I'm looking at it again on the screen, when did student loans become popular? The third article down on the first page of the search, the side with Wikipedia that I read from a minute ago at the top of it, on the third item, it comes from onlinecolleges.net. And out of the blue, it chose the most specific 10-year range for extreme college tuition expense is 1999 to 2009. What happened then? The repeal of Glass-Steagall. 73% in 10 years. And you don't put compounding on that like you would earned interest. That basically, a person looking at doing tuition 10 years later, is 7.3% a year, each year higher, whatever year they try to figure out what they're going to do on average. We're well above on expenses in so many key items, particularly the insurance and medical fields, well above what any inflation figures mean. And that's the reason I say stagflation's been here. It's just getting ready to slobber knocker the Western world pretty heavily because of the import needs we have.
Yeah.
Well, and see, the big difference too is the stagflation that came out of the 70s was pure and simple because we started expanding the money supply thanks to the petrodollar.
Right.
If you remember, one of the key things that Kissinger did was he allowed OPEC to triple the oil price. Well, if your currency is tied to the oil price, guess what? You can now print 3 times as much.
Correct.
If you triple the price. The other thing about there's another thing that's missed out of that article. What is it? One of the first things Obama did in his second or third year in office, he nationalized Sallie Mae.
Yes,
That means the government backstops. And the reason I think that they did that is because they knew that they weren't going to create jobs. So they needed to get people into going to school so that they could take their minds off the fact that there are no jobs. And when you have that much money and that more people going to universities, of course, there's going to be these universities are so flush with cash. They just created all these different. I mean, just take a look at the endowments. The university. What the hell does Harvard need a $2 to $3 billion endowment? Why aren't you paying for the college of every single student that comes in there with that? Exactly. What's the purpose of doing it? That tells you right there that it's simply a private slush fund organization for the establishment. But it's the same thing with a public university. A public university, at the end of the day, an endowment should have zero money like a 501c3 charity. They should have zero money at the end of the year because that money should be dedicated towards financing scholarships and the education costs of people, of their students. Yeah. But that's here nor there. But those are the reasons that Obamacare and the fact that more and more people went on to disability and Medicare under Obama, shooting the cost of medicine up. And this is the key thing: if the government got completely out of this, you're going to have like Trump wants to do with real getting rid of Obamacare. But the fact of the matter is that the real root problem from all this is never talked about, and that's why no matter what program they do, they'll never solve it. The problem is that they've devalued the purchasing power of the currency. That's why everything is too expensive and unaffordable. Had they not messed with the currency, then there wouldn't have been a single problem. You wouldn't have to worry about minimum wages. You wouldn't have to worry about medicine. There was a guy, I think it was one of the members of over at McIlvaney Report. Mm-hmm. When he came to America, he was, I think, from Switzerland, whatever. He got into medical insurance in the 40s and 50s. And he said he would sell catastrophic policies, and the policies would be worth $5,000. In the 20 years that he sold that insurance, he never found one instance where somebody had to claim an insurance benefit for a catastrophic of $5,000. Everybody paid for their medicine, their medical needs out of their pocket. The bills never got up to $5,000.
Yeah.
So the problem is the destruction of the currency. It always has been. Every single problem we have today is destruction of the currency. Well, the answer, of course, is to destroy the currency, whether it's the road to Rooter or not, but go back to a gold standard, because contrary to all these idiotic analysts and economists who say, we can't go back to a gold standard. No, you're not. You're an establishment hack. The reason that they don't want to go back to the gold standard is because the gold standard forces politicians and government to stay within their means.
Exactly. W, what's the latest? What else is on your radar?
Well, I think, this China thing is really where I still want to stay.
Yes,
the reason I want to stay at the China thing. Yeah, I'm sorry. The reason I want to stay at the China thing is because I don't think people understand it even has implications or an impact on what's going on in the Mideast. Whenever the Mideast starts to get going and we get all our attention there, seems like we're playing ping pong. We talked about this the other day amongst us in the group privately. Russia likes to play chess. China likes to play ping pong.
Mm-hmm.
And so as soon as the attention all goes to one side of the world, their counterpoint is to do something over there that draws attention back to them. And so in this moment, we really have two places that we have to pay attention to. The very fact that China is becoming an issue and getting our attention this week and probably over the next couple of weeks on the financial side, we should also watch, because the magician's trick is the Mideast is going crazy right now with actually getting ready for the next conflict, probably related to Hezbollah. But we have troops on the ground in Syria now. Very few Americans even understand what's happening in eastern Syria. We are committing to get ready to do this next phase. And the other interesting thing as it relates to the financial side, et cetera, these games between the various players, whether we talk families or the different three-letter agencies. ISIS was a creation of US's, of CIA, and of other NATO groups. That's important because who are we actually getting amped up to go after in eastern Syria? ISIS. Right. So what's Trump actually doing? He is taking out the functional military wing of CIA.
Correct.
So as that is happening, just like here domestically, CIA is under attack, and it relates to an anti-Trump, essentially shadow government operation. The Fed, shadow government, really in the financial realm, some interest in competition with or in direct opposition with the current government in power, with the administration in power with Trump. We're having almost an internal war against agencies or entities that have been working from the U.S. Around the world. This is house divided against itself kind of stuff. Yeah. And I think that what's going to happen with this taking out of ISIS in Syria, State Department's been neutered. Nobody in the State Department's calling anybody because they don't have any authority to. They got told right off the bat when the administration came in, don't call anybody, don't do anything, don't send anything out unless you get permission. So State Department's sitting on their thumbs, CIA sitting on their thumbs. And in the meantime, the military and other entities, political entities, are going in and essentially deballing them. What's going to happen? So while you're watching China and while you're watching what's going on there, which is very important, you can't take your eyes off the Mideast, because we are really getting ready for some serious action. Probably something here mid-April to mid-May, but I think the real push is next fall, late August into early October, and that's when that region there is going to be, all the world's going to be watching. And this back and forth ping pong of drawing our attention on the monetary stuff, on the military stuff, on the monetary stuff, on the military stuff. And at the end of the day, it's actually families competing for control of what's going to happen next in the world.
Got it. Bankster.
Yes. Sometimes I have a hard time with that mute button.
CJ has a hard time with mute buttons as well.
Yeah.
Shush
yeah.
it.
I was going to remind everyone that this year is an important anniversary. It was 70 years ago this summer that the CIA was formed.
Oh, happy birthday,
Officially.
Cocaine Import Agency.
Right. With the number 70, as W will know very well, the number 7, it's all a very important number to these people. And he's right. We talked a lot about the battle between families, and we always focus our attention on Rothschild and Rockefeller. And I would remind everyone, these are just the current generations of these family bloodlines. This war goes back 3,000 years, and it's still being fought. And that's actually, in a weird backdoor kind of way, that will lead into, or is already leading into, the information I've been publishing about Antarctica and what the beliefs were among the Germans and the people who run the world as far as what their literal lineage is. And we're seeing it being played out to themselves. They keep a lot of that information in the dark. But if you dig a little bit, you find that occult links between all these bloodlines.
Yeah, absolutely. Absolutely. Ken, give out your 5-minute thing, then we'll go to Wolf.
Yeah, one of the significant things, I think, there was another indicator. All you got to do, for those who actually paid attention, not that I would ever advocate it, to watch Janet Yellen try to do a Q&A after an FOMC meeting. That is as bad as getting Morgellons disease and having to scratch your arm for the next 15 years. The fact of the matter is that when she was asked a difficult question, she couldn't answer it. And she contradicted herself over and over and over by saying that they were going into this rate hike by looking at the confidence that the economy was great, and then when the reporters asked a question, she backed down and said, "Well, there's a lot of noise in the numbers." The fact of the matter is that the Fed is completely out of control, out of their league. Their theoretical academic data models no longer work. And so what the Fed is going to do is going to cause more problems to our monetary system, our financial system and economy than you can ever imagine. And it's no wonder why China is suddenly saying, screw this, we're disconnecting from the dollar, because the dollar could really bring about severe pain in their economy. The other side of the coin, as we go forward, is we had, what was it, industrial productivity today fell, and couple that with consumer retail spending falling, rising inflation. For them, if we remember, Bernanke wouldn't even admit we were in the Great Recession for something like a year and a half after we were fully into it. The Fed's never going to tell you anything. The mainstream media is just a bought and paid for tool of that Fed, of the establishment. So everybody needs to prepare now for not only what appears to be a growing war, the war drums, but going into a recession, high interest rates, rising inflation, and political turmoil. It's no longer about finding a way to profit from what is going on right now. Where the world is fully entering into survival mode.
Yeah.
And so that's where people need to really be now putting themselves, and I'm not talking run to the hills and, Y2K, do all this stuff. No, but it's a matter of get completely out of the paper markets. I don't care if the stock market goes to 29,000. If the dollar is really what is in the targets, then your paper, whatever paper assets you have, are completely, moot.
Right.
So, do what you can, get everything protected, and just watch, because things are going so fast. I mean, everything's happening in a matter of days and weeks. It's no longer months and quarters and years. And, we're not going to put any dates on all this stuff, but the signals have already been laid out, which means that it could happen any time. If China, what Bankster was saying is that they've got, they are completely realize that Trump is a good guy, but he's being outmaneuvered by the establishment, the cabal, and they're trying to save their own bacon. So China's not going to, China's going to let America fall because of the fact that we've built our own coffin. Mm-hmm. Europe's going to fall, and if the East through their bilateral trade agreements, by pulling in the Middle East and leaving Europe, America, South America, and Canada, by leaving them isolated and collapsing, you know what? The thing about the matter is that some places like China and Russia are used to hardship. They can deal with an economic slowdown. They can deal with these type of things, but they'll all be willing to trade and stay stable amongst themselves. They have all the energy. They have enough food production. They have the strong currency, and most important, they have the gold.
Absolutely. Absolutely.
Let me just add in there too. We had this conversation almost a year ago when I was talking about the inflation to come. This is W, and the market continuing to go up. And the point is, yes, for those traders that are leveraging their buys and sells, this fast rising market makes sense. But for people that are, looking forward to retirement or some future, you have to pay attention to the dollar. And my point is that with this inflation that's coming, you're really looking at a devaluation of the dollar. Trump has said he needs a weaker dollar. This attack on the dollar is going to be relentless as it comes on, and it's attacking your savings. So you get double the amount for your house. How much you can pay in taxes in the meantime, and besides that, what are you going to buy with it after you get the money out of your house? The dollar is not going to buy as much. This inflation is going to be brutal, and that's where we go back to, even with the high cap market stocks going up radically like they are right now. What's that really telling you? Those stocks are based on real assets. There's a rush to assets that have tangible value, not paper, whether it's paper gold certificate as opposed to real gold certificates. Even if the dollar, a la Bixweir, goes to a gold standard, you want to have the tangible, not the paper. And that's the future that's coming. That's where you need to be focusing your mind. What do I have that's real that I can lay my hands on moving into the future during this time to come?
Absolutely. Wolf.
What I got to say is go back and listen to what Ken Shortgen said, replay it, and pay attention. He said everything I would have said. I've seen the overcapacity. It's a side note of inflation, or stagflation, It's real. We're getting ready to deal with it. And it's going to be uglier than it was in the 70s. People need to pay very close attention to what they think is their digital wealth that makes them feel warm and fuzzy when they get their quarterly statements. You may not be able to get to it as easily as you think if this thing takes off the way I think it's going to. You need to be in hard assets. Gold and silver bars and coins and a little Bitcoin won't hurt. But I can't. This thing with all week, I don't know how many people was complaining about, why is China not on the alternative media anymore? It used to be that's all they talked about. I remember back in 2014 in the spring, it was like the only news you would hear. Oh, they got a big deal going on with Russia coming in. I'll never forget that one. Biggest energy deal in history. Markets have collapsed, the dollar's done. Nothing happened. But you heard about China constantly. We ain't been hearing about them. I think we're about to hear about them. I think we're ready to hear about them quite a lot. And to be honest, this ain't rocket science. We're importers, they export. We need their stuff. And if we're sitting in a stagflationary environment, which we are, I've seen the car lots overflowing and empty lots that are in abandoned buildings, and they're loaded up with new cars. The car dealers are renting lots now. That report on Zero Hedge, it was put out, I don't know, 3-4 weeks ago. I saw it and read about it. I've seen it. It's real. So we're getting ready to deal with too much stuff without any buyers. Prices are going to go up. You've got to prepare yourself, as W said, with hard assets be tangible with what you have, it's going to pay off for you, not only in the long haul, but in a near-term basis too, I'm afraid.
Absolutely. Absolutely. And with that being said, we've come to the end of the broadcast. I want to thank all of you guys for listening in. Amazing analysis by everybody here on the team. Some really big major takeaways for us to really deliberate and to think about for this weekend. I urge all of you, if you haven't heard this interview from the beginning, to go back and listen to it again. It's going to be posted here, of course, on YouTube, so hit the subscribe button. Also, check out roguemoney.net, where you will be able to view this interview as well as countless other interviews that have been uploaded to the new site. So again, guys, thank you all for joining us, and you can follow us on Twitter at the Rogue Money, roguemoney.net, as well as the Rogue Money Facebook page. And also our interview that we did with Gavin McGinnis is up, so if you got a chance to go and listen to it, it's a lot of fun, and we have a great time with that. Great interview, guys. Thank you all for joining Team Rogue Money. We are over and out.